Welcome to Economic News Desk. For July 6th, we are tracking a major split in the luxury market. High jewellery is emerging as a safe haven asset for the wealthy, while the natural diamond industry is fighting a massive rebranding battle against the rise of lab-grown stones. While the broader luxury sector faces a cooling period, high jewellery is proving to be a significant outlier. Research from HSBC shows this segment is outperforming the average sales growth seen across the wider luxury market. This strength is tied to a massive wealth effect, fueled by record-high stock market valuations in the United States. For many wealthy consumers, rare gemstones and gold are no longer just fashion statements. They are becoming tangible assets held during uncertain economic times. For the fiscal year ending in March 2026, Richemont's jewellery brands, which include heavyweights like Cartier and Van Cleef & Arpels, reported combined sales of €16.5 billion, an 8% increase over the previous year. To maintain this momentum, brands are moving away from mass-market retail and toward what they call a moment of discovery. This involves a focus on one-off, technically complex pieces that are difficult to replicate. Piatt's chief executive describes this high jewelry segment as a lab of creation, where these unique, highly artistic pieces serve as the testing ground for the designs that eventually trickle down into the brand's standard lines. To reach this ultra-wealthy clientele, the sales process is becoming more private and immersive. Instead of traditional storefronts, brands are investing in high-impact launch events and exclusive experiences in locations like Venice and parts of France. But as the top end of the market doubles down on rarity, the rest of the industry is facing a massive shift. Natural diamond producers are now fighting to protect their luxury status as lab-grown stones move from a niche alternative to a dominant market force. Recent data from Tenorus highlights just how fast this shift is happening. In the first 5 months of this year, lab-grown stones accounted for 57% of all engagement rings sold by unit. To put that in perspective, in 2020, that figure was only 10%. This rise is driven largely by price sensitivity among 25 to 35-year-olds. The price gap is enormous. A 1-carat round lab-grown diamond averages about $768 at retail. By comparison, a natural diamond costs roughly $4.53. As lab-grown stones capture the mass market, natural diamond producers like De Beers are pivoting their entire strategy toward the high luxury segment. This follows the Luanda Accord, where diamond-producing nations and De Beers committed to funding global marketing to help consumers distinguish genuine stones from lab-grown alternatives. Marketers are no longer trying to compete on price, they are competing on authenticity and permanence. The goal is to position natural diamonds as enduring, high-value assets that stand in contrast to the fast-paced, disposable nature of the digital world. We are already seeing this play out in niche markets. For example, KZ Colored Diamonds saw a 19% increase in sales at U.S. independent jewelers in the first quarter of this year. That is the latest from Economic News Desk. The important part is what changed and what listeners can now watch more clearly.